Welcome to Integrated Planning, where we take an integrated approach to growing and protecting your wealth. My name is Sophie Blais, and today we're going to be talking about the 6 key areas of financial planning. So the third area to consider in financial planning is insurance and risk management. I always laugh, insurance is a dirty word to a lot of people. And it's interesting, when I started in the business, I started on the group insurance side of things, and my dad didn't say I was insurance for many years. And you know, a lot of people feel that way about insurance. And so the term risk management has come about, but it's a really important topic, one that's often overlooked, one that's often forgotten or put to the side, and it is an area where the impact to your financial plan could be the greatest. So one of the things I want to talk about is that your need for insurance or risk protection products change through your life. When you're young, you have a young family, you likely have a mortgage and a lot of debt. That need for some insurance in the event that something happens to you, you die, is really important. As you get older, your needs might change. Your risk of becoming critically ill or becoming disabled increase. You maybe have a business that you've started, so you need to make sure you've got protection in place for that. But there is an ebb and a flow to risk protection throughout your lifetime. So I think it's important to know that there's a couple of different ways that we normally talk about protecting for risk. One is you can buy a traditional insurance product. The second is self-insurance, right? So making sure you're putting money aside to protect your family or your business in the event of an unforeseen event. The different types of exposure or loss that you can suffer are death, which again, as somebody who's been in the business for 20 years, that's an easy topic for me to talk about because it is really important. And at the end of the day, not talking about it can lead to some serious problems if something does happen. The other area that we need to always look at and talk about is disability. So life insurance protects those you love. So they are the ones that get the check in the event that you pass away. Disability is what I would call more self-centered insurance because it does pay you in the event that you're disabled. In Canada, 1 in 5 Canadians will experience a disability in their lifetime that will last up to 5 years. And so the risk of disability in many cases, especially when you're in your prime income years, is higher than your risk of death. So making sure you're protected is really important. There's a variety of different ways that you can get protection from being disabled. Group insurance plans will offer coverage. Make sure you know what the contracts state. You can buy individual insurance as well. If you're a business owner, it's really important to take a look at this because it can have a significant impact on your business and the growth of that business. What is your greatest asset? Most clients will answer that their home is their greatest asset. Their business might be their greatest asset. If they've got land or, you know, a farm, those are their greatest assets. But those are all incorrect answers. The greatest asset that you have is yourself and your ability to earn an income. There's a story that goes that you're a money printing machine. So if you had a money printing machine in your basement, would you insure that money printing machine? You have to look at that money printing machine as yourself and your ability to earn an income. A lot of people mistakenly assume that they have adequate coverage through group insurance plans or different association plans. What I would suggest is that with your advisor, you take a look at the coverages you have to make sure that you have the adequate coverage to actually replace the income that you'd be losing in the event that you're unable to work. So everybody knows somebody that has suffered one of the top 3 critical illnesses in Canada. So that's heart disease, cancer, and stroke. There's actually insurance available to cover critical illnesses. It's called critical illness insurance. And what it does is it pays you in the event that you become critically ill. The purpose behind that is quite simple. It's to give you the freedom to seek the care that you need, to live the life that you want to live. You can pay down debts. You can actually do anything you want with it. And it's there to give you some freedom and some flexibility. You don't need to be employed to qualify for critical illness insurance, but it's certainly something that you should look to adding to your plans. When you're working with your advisor, have that conversation as to whether or not critical illness makes sense for you. There's also property and commercial insurance and things like that. I'm not going to go into detail about those, but that's all part of a good risk management plan. When you're looking at risk management, there's a couple of questions that you need to ask yourself. 1, where would the money come if I were to die or pass away? Where would the money come if I was unable to work, whether from disability or sickness? What would happen if my spouse suddenly passed away or became disabled or sick? And what kind of life do I want to have, or do I want my family to have in the event of the unexpected? So some of the more challenging conversations I've had in my planning career have been around insurance and whether or not clients and families want to pay for insurance. So there's a couple of different ways that we can look to protect for risk. One is through obviously the traditional insurance and purchasing insurance for the various risks that you might have. The other is self-insurance, right? So that concept of there is money someplace to cover for those needs when they arise. The one thing I would recommend that you do when you're working with your advisor and your integrated team is to make sure that the concept for self-insurance isn't pulling money away from your retirement plan. So, if you have built up a nest egg of $1 million for retirement, all of a sudden you're 45 years old and you become disabled and are unable to work, you could easily eat through your retirement savings, hence changing your whole entire life plan. So again, the importance of working with an advisor, a financial planner, your tax planner is really key. If you enjoyed what you heard and you learned something new, feel free to press like or subscribe to our channel so that you can continue to get great updates on financial planning. Click the link below if you'd like access to some of our free resources to help you in your financial planning journey. Make sure you reach out to your financial advisor or CPA to make sure you have the right A-team behind you to reach your business and